My name is Matthew Coit, and I'm a manager at Bloom Shapiro in our government practice. As you're all aware, the past few years have brought significant changes to financial accounting and reporting for government entities, from new pension and other post-employment benefit standards to tax abatement and asset retirement obligation changes. GASB has been particularly busy in recent years. While changes over the past few years have been incredibly impactful, standards becoming effective in the next year and beyond are looking to be just as monumental. Perhaps the most significant of these upcoming standards regards GASB Statement 87, Leases. The standard is effective for periods beginning after December 15, 2019, but it is imperative that this be considered by management of government entities now. What the standard does is establish a single model for lease accounting. Under new guidance, both capital and operating leases will result in lessees recording an asset and liability. This is a huge change from existing accounting where only capital leases are treated in this manner and operating leases are simply disclosed. Such a change will bring the new operating lease assets and liabilities onto your organization's financial statements. Lease disclosures in general will also be expanded. All of this will require a higher level of information be kept for lease agreements to ensure they are accounted for and disclosed appropriately. As essentially an overhaul of lease accounting, this standard will have an impact on organizations with hundreds of leases all the way down to those with just a handful of lease agreements. Given the breadth of information necessary to make the adjustment, adopting this standard will be no small task. Much of the infrastructure necessary from a system and operational perspective that will be required to track the applicable lease information isn't currently in place with most organizations. With this in mind, waiting until the year of adoption to begin analysis will be too late. In organizations with even a moderate level of leasing activity to be aggregated, the process should be in full swing currently. Many organizations will find additional software must be purchased in order to track the necessary information. Analysis of these software packages, selection, and budgeting of those expenditures will need to occur prior to adoption. Speaking simply to the point of readiness and effort required, organizations governed by FASB have a similar leasing standard that recently had its implementation date delayed for private companies. The delay was due in part to the magnitude of information necessary to adopt the standard and the general lack of readiness seen. For those following government accounting standards, we hope this is eye-opening into the investment of effort that's required for adoption of the GASB equivalent of the leasing standard, and that it stresses the importance of not delaying. Due to its importance, Bloom Shapiro has made GASB Statement 87 a point of emphasis and have continued to expand our capabilities with regards to it. In addition to the guidance necessary to catch you up to date on this standard, Bloom has the tools that will help you become compliant. We have a robust team in place of lease compliance experts paired with a state-of-the-art technology solution designed to accumulate information necessary for implementation, all while saving you time and money. We can provide solutions and guidance tailored to the specific needs of your organization that'll facilitate the tracking of the information necessary to remain compliant. At Bloom, our goal is to help our clients not only navigate upcoming issues, but to leverage those as opportunities to help our clients to grow. We help you find the resources available helpful and encourage you to contact us if you have any questions or concerns.